Welcome back to another episode of our Market Outlook series. I am Kavita Agrawal, the founder of EXP-Invest. And today we are here to talk about Nifty, Bank Nifty, and the intersector chart analysis. We do this analysis every week on Friday at 4 p.m. to see, first of all, how the momentum or the waves in Nifty are unfolding and what do they tell us about the coming week. And we do the same for Bank Nifty. And of course, the intersector chart analysis we do every week to determine where is the momentum heading and where should our capital also follow. So without any delay, let's move forward to the chart of Nifty. So every week we start with a 3-minute time frame. And you can see on this 3-minute time frame that the momentum has been phenomenal. So this is Friday and this is where we opened this week. So this is where we opened, right, with a massive gap up on positive cues from the political front. Let's see, this was an upside of almost 1%. And this entire week itself, we've rallied a massive 3.5%. So if you look at the 3-minute time frame, we said that we are waiting for a solid breakout on the 3-minute time frames RSI above the level of 60. That breakout for us came at the end of November. And this is when we very aggressively allocated capital to the market. This is also where the momentum really caught on a very sharp slope. This positive momentum is definitely still very strong, but the 3-minute time frame is giving signals. This resistance that has started coming in from the level of 60, even though the price is still at the all-time high, this is an indication that a very mild correction might be forming. This is obviously the 3-minute time frame. So the maximum it can give us perspective of is maybe 2, maybe 3 days at max. So since this started off on Wednesday, we can see on Wednesday, Thursday, and Friday, we already seen some subdued activity in the market. In my Telegram channel, where I'm connected with people, or told that the next few days there might be some rest, so not to worry about it. But let's move on to one time frame higher. Now, what is interesting is that even the 15-minute time frame is showing a negative divergence between the price and the RSI, which is again indicative that a small correction may be forming. But that being said, that's absolutely nothing to worry. And why there's nothing to worry, I'm going to tell you about that in a moment. But let's focus on the 15-minute time frame. So two things jump out at us from a very quick glance. Number one is that the negative divergence between RSI and the price, which means that prices still have the same high as the previous high, but the RSI is taking significant resistance at the level of 60, 65, which is a negative divergence. So we can expect a little bit of a bigger correction. So this same phenomena was also noticed at the beginning of the trend where the price made a higher high, but the RSI made a lower high. And then we saw a very small dip in the market. How much was that dip? Let's take a quick look. That dip was barely 100 points. So from this dip, if we say like 100-point dip, it's honestly nothing. It's already taken that. However, I have a support at the level of 220,750, which I think should not get breached whatsoever in this amazing momentum that we're seeing unfold. Another thing that we can notice is the volume activity. The volume activity has taken a bit of a dip. So this is the 20-day average volume versus the 100-day average volume. Okay, that is the math behind this histogram that you see. And what we can see is that on the 15-minute time frame, the recent price activity since Wednesday shows a little bit of dip, which is actually to say that whatever this is happening is not going to sustain. Let's move on to one time frame higher, that is the 75-minute time. The observation that we made about the volume on the 15-minute time frame, this is a lot more pronounced in the 70-minute time frame because you can see this massive decline kind of thing. And the volume was naturally the highest on the 30th of November, basically when the acceleration really come to the market. What is very noticeable is that even though this volume is visually looking like it is declined, the fact is that this in no way suggests the end of any rally. It's just suggesting that it's just a little bit of rest period because come on, the Nifty, the index has rallied very strongly over the last few weeks. If you look at the RSI here, the RSI is extremely bullish. There are very few things that I love as much as the RSI sustaining above the level of 75. There's a swing trader for me that's like super bullish trend, lots of, right? So the 75-minute time frame chart looks extremely bullish. And if we talk about daily time frame, oh my God, the day frame is another super duper bullish. The volume, excellent. The RSI, excellent. The way the trend is unfolding, excellent. So if you watch my previous sessions of the Market Outlook series, you know that my target on Nifty initially was 21,300, but I revised my target to 22,000 because that is where my ultimate resistance trend line lies. Depending on how much time this index takes to unfold towards the target, the more time it takes, the target will keep moving higher and higher up following this particular resistance trend line, which I'm going to take in for you. This is the resistance trend line, which is actually my target. So I'm putting out the level of 22,200. But if this loses the momentum, but it still continues to go up, then I will be revising my target to further maybe 22,400. But this is what it is. With that, let's move on to the chart of Bank Nifty. Oh, another very strong rally in Bank Nifty. And my first target has been achieved of 47,350 has been achieved. But it looks like I have already given you the second target of 49,500, which also I expect to get achieved, considering how strong this rally that is unfolding in the banking sector looks like. If you've seen my past series, you know that I'm not a very big believer in banking sector because despite of technical and fundamental studies, human activities like government policies have a huge impact on how the banks play out. So here we can see that the volume turned pretty positive during this rally, which lends a lot of strength. So actually, if Bank Nifty comes and takes support at the level of 46,400, I think that would be a very attractive point to buy banks again. I personally, in some of my clients' portfolios, I had some banking positions, but what we can see is that today a lot of those positions actually triggered their trailing stop losses and ended up in profit booking. So that's about banks. Let's move on to the indices, the sector indices chart. And we will see how has the rally been unfolding here, who's the winning sector. So since Friday, what we're seeing is that the energy sector has emerged as a definite winner with a rally of 7.44. Energy sector being positive is something that I have commented about in the market outlook series before also. So energy sector has done pretty well. PSU sector has come back into momentum, something that I totally invest on, so it's up 10. The PSC sector, the public sector enterprise sector, so this was indicated to be very bullish, and I've been talking about the PSC sector since the last few sessions, and this is up 5.5%, which is great. Bank Nifty, close bank, private bank sector, close bank, commodity sector 5%. Finance sector, CNX finance sector is where I think some very interesting opportunities are coming up, and this I said last week as well. So if you want to know more about those opportunities, I suggest that you join my Trade Together program. How to join it? You can see the link shared by the ET moderator for Gap Up. I'm going to share that link too. So Gap Up is a platform by Rigi and Economic Times and Money Control together, where you can find SEBI registered research analysts like me to recommend you trades, not just stock names, but trade setups with proper stop loss target and everything. That at least that's how I work. In addition to the stop loss target, I will also tell you how much of your total corpus you should allocate in every single stock. Because remember, if you want to become a profitable trader in the stock market, there are two things that you need to do very optimally. One is your risk management, one is your capital allocation. Of course, there is a lot of other steps behind being successful, which I, by the way, cover in my advanced technical analysis course, which is totally focused on swing trading. So if you want to know about that, then please join my Telegram channel. I'm going to drop the link of that in the comments below as well. So coming back, so what we can see is the service sector, finance service sector, metal sector, and infra sector. Here also, so see the market overall is very attractive, right? The sector is also attractive, but you have to be really careful because the signals that are turning up on the IT sector are a little bit confusing. I am not very confident of those. So my investments in the IT sector is more from a long-term perspective than from a short perspective. Healthcare and pharma sector, they are rightly at the bottom of the ladder because pharma and healthcare sector we picked up on those rallies right at the beginning, and is the time we've approached the stage of profit booking. So if you see my market outlook series from maybe 2-3 months back, you will be advocating the pharma and the healthcare sector very strongly, but I think they are heading towards a bit of a profit booking kind of state. So fresh entry is definitely not recommended there. The FMCG sector, the consumer sector, and the consumer consumption sector, and the consumer durable sector, I think these three sectors are going to be the underdogs for the next maybe few months, because stocks like Bajaj consumers, they are showing, so they already have strong underlying rally, but despite of the strong rally in the market, they are in what I would call a bit of a consolidation stage. And I am, however, very positive. So I am building my position. I'm also recommending my members to do the same. Again, if you want more information about how I help people do proper trades in the stock market, please connect with me on my Telegram channel. That's the best way to get connected with me. So with that, I have presented everything that I had to present. I'm going to take some time to help you with your stock queries. So look at your portfolio. If you have stocks that are in red, drop the name and the cost, and I will tell you what your stop loss and target should be. Similarly, you can also get an entire portfolio cleanup service done, or you can get a one-on-one consultation. Again, the link of those have already been posted by the ET moderator. So just quickly scroll up and find them. Have a question for me. How can I become a profitable trader? So, Oshtu, the first step to becoming a profitable trader is to become a disciplined human being. Being a profitable trader is basically following lots of systems in a very disciplined manner. And I personally have systems all the way from identification of the stock to monitoring it to making my position to trailing my stop loss to exiting the position and then doing a past trade analysis. So that's how I come the whole circle. So if you want to know more about my process, my systems, my dashboard, which helped me become a profitable trader, then again, join my Telegram channel and consider joining my advanced technical analysis course. Thank you so much for joining me and giving me your time.